All right, welcome back to Good Morning Arkansas. One of the ways the government has tried to spur on the economy is lowering interest rates. And Scott McElmurry with Bank of Little Rock Mortgage has joined us to discuss something I've been wondering about myself. I've got a pretty good mortgage on our home, but how much better would I have to get in order to make it worth spending the money to refinance? I'll bet you're getting that question a lot.
We are, quite a bit, actually.
And I know there's no one answer. It depends on what the person has and what you could get them to. But talk about some ideas for people who are homeowners and who may become homeowners in 2009.
You know, actually, rates right now are just historically low. We've gotten to really a 37-year low, so we're getting a ton of questions, like you said, about is it time to refinance? What should I do? Well, you know, now there's not a better time to look into it, certainly from a buying standpoint as well. If you look at and believe what the national media says, that house prices are at their lowest points that they've been in several years, and you combine that with historically low interest rates, there probably isn't a better time to consider buying a home, especially for a first-time home buyer who does not have that house to sell.
Right.
They can step right into the market and take advantage of it.
All they have to do is be qualified and then get the rates and get the lower prices on homes. All right, let's take a look at some points that you go over with the folks who come into your office. You're encouraging homeowners like me to look into refinancing.
Absolutely. I mean, it doesn't cost anything to look into it. One of the things that you want to do is kind of make an evaluation, at least yourself, as to why you would want to refinance. There's three main reasons to do so. One is obviously lower your payment. The second might be to lower the term, to pay your house off faster. And the third might be, hey, do I want to maybe consolidate some higher interest debt into, if I have some equity in my house, into a lower interest mortgage. So some of the things, let's take lower your payments, for example. Assuming you have a $100,000 loan and you had a 30-year mortgage, if you drop your rate 1.5 points by refinancing, you can look to save about $100 a month. So you can use that same factor. If you have a $200,000 mortgage, it'd be about $200 a month. When it comes to lowering the term, for example, using the same $100,000 loan, a 30-year loan, if you're able to drop your rate 2% by going to a 15-year loan, you're looking at about $130 more a month to pay that off within 15 years, but you're saving yourself well over $100,000 in doing so.
Yeah,
again, if you stay there. Right.
Yeah.
And then, of course, using your equity to pay off your loans. If you've got some interest, high-interest credit cards, possibly even a car loan, something along those lines, that now that rates are so attractive, somewhere in the 4.625 range on a 30-year fixed, it may make sense to look into paying off some of those things and getting them to a lower interest rate and getting that debt to something that's more tax deductible.
So you would structure the home loan with a little cash above and beyond what's needed.
That's right.
To pay off those other
and that's certainly
debts.
A possibility. Again, those are things that you really want to consider, because the last thing you want to do is to take short-term debt and put it out over 30 years or 15 years if you're going to pay it off sooner. So those are things you really want to evaluate, and part of doing that is to get a savings evaluation. Give us a call. We can walk you through the steps, ask the pertinent questions like how long you think you'll be in the house, what your interest rate currently is, and what your goals are to refinance, and make sure that, number one, it does make sense, and which of those three makes the most sense for you.
As far as new homeowners go, it's great interest. Yeah, the home values are lower, but isn't it harder to get credit now? Haven't the credit lenders tightened up a bit?
I think that's probably the biggest disservice that we have done from the national standpoint to discourage that, because it's really not the case. You have the fringe, what I call the fringe, that was being done back in 06 and 05, where maybe you couldn't prove your income or you had that marginal credit. Yeah, those programs have gone away. But if you have decent credit, it doesn't have to be perfect. You have to have some form of down payment for the most part, upwards of 3.5%. But you can still get a loan and a very attractive interest rate. FHA, for example, requires 3.5% down. You're looking at 4.5%, 5% for that kind of loan. And so it becomes a very good opportunity for someone who, say, lives in an apartment or is renting right now to look into buying.
What about the cost of refinancing your mortgage? There's a fee involved.
There is, and you're looking at closing costs. That again depends upon, it's a function of the interest rate. The lower rate that you want, the more you may pay to get that rate.
Size of home, does that play into a role?
The size of home certainly does. Size of loan plays a role, because some of those costs are fixed, and you want to look at what's the percentage of my loan that I'm essentially having to pay for to refinance. And falls in line with doesn't make sense. If I'm paying $2,000 to save $100 a month, well, if I'm living there for 6 months, it doesn't make sense. If I'm living there for 30 years, maybe it does. If I'm paying $2,000 to save $20 a month, it's probably not something you need to do.
It's probably going to take money to make money, or at least save money.
Certainly it could,
bit, yeah.
Right.
Okay. Scott, thanks for being here.
All right, appreciate you.
If you would like to get in touch with Scott, it is Bank of Little Rock Mortgage. There is where they're located. You may have a question for him. Feel free to swing by or give him a call, 219-9100.